Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by Matt Schultz, who's the executive chairman of CleanSpark. This is one of the top Bitcoin mining companies in the entire world right now. Absolutely phenomenal growth in 2023. They just came out with earnings, so we've got a lot to talk about in today's presentation. But before we get into it, please take a second, hit the like button, you guys. It's 100% free to do. It's a huge help to myself, Anthony, and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of CleanSpark, how you think they stack up to some of their rivals in the Bitcoin mining space, and your price target for Bitcoin going into this year's halving event in April. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, Anthony Power and I are joined by Matt Schultz. He's the executive chairman of CleanSpark. CleanSpark has been on an absolute tear, really by any metric over the last year. We've got a lot to talk about. They just came out with earnings. We have January production results. Just today, they increased their exahash, 40% increase from 10 to 14. So Matt, we've got a long list for you. We're gonna jump into it, but first things first, thanks so much for being here.
Hey, thanks for having me. It's great. This is my first time with both of you on the channel, so I'm excited to be here. I appreciate the opportunity, and we always have some spirited conversations.
We sure do. Yeah, the first one, 2-for-1 power mining. This is great. So first question, can you walk us through some of the highlights of your recent earnings and the January production result that just came out, Matt?
Yeah, so, you know, our industry has kind of been hamstrung from accounting rules for a long period of time. The new FASB rules allowing us to mark the Bitcoin asset to market is really the way to fair value it. So just to kind of give you an idea, if we were mining through July and we have obviously a published cost that we mine, there's a market value to Bitcoin. If there was one period during the month that Bitcoin hit, and doesn't have to be a closing price, that Bitcoin hit a low, you're required to impair all of the Bitcoin for that entire period at the low point of the month. And it could be a single trade in the middle of the day. So the challenge is then you can never write it back up. And that doesn't make sense if you're talking about fair valuation. So the new FASB rules allow us to mark the asset to market. And as a result, we were able to realize gains on the Bitcoin that we mined and the Bitcoin that we've held. And I think you're going to see a lot of our peer group when they report. You know, we're kind of an anomaly because we're a 9/30 fiscal year end. So, you know, we already did our annual report, and then this was our first quarter that we reported. So you're going to see with many of our peers that they're going to utilize those new rules to be, you know, more fairly and appropriately report to the market what exactly it is that we have and what that valuation is. So, you know, we've continued to have increases in our production, and it's been twofold, right? I mean, you look back in, I guess, September of 21, we were 1 exahash. And then by December of 22, we're 6. And October of 23, we're 10. And, you know, this morning we're 14. So doing that it seems like you know, you went from 1 to 14. It's not that big of a deal. But when you realize that, you know, we now have in the neighborhood of 120,000 machines plugged in, and we have data centers spread all throughout Georgia. In order to do what we do, and then to have the efficiency that we've had, has been a lift that I think is unique in the industry. You know, we disclosed on our earnings call that our average uptime is greater than 99.9%. So that means our realized hash rate is higher. What does that mean to an investor? Well, if I have stock in CleanSpark, CleanSpark owns mining machines, it doesn't make me money if those mining machines are not operating or if they're not operating at full capacity. So, you know, we've tried to mitigate that risk. And you know, I'll give you an example. We have labs on site in our facilities, and we do repairs all the way down to chip level. So, you know, you guys have a standing invite, but when you come out and you know, they've got the microscope on the bench with the giant screen TV to see, you know, it's like almost like a surgeon, right? And we can do those repairs on site not only does that save us hundreds of thousands of dollars, but traditionally in this space, especially if you're asset light or you're not vertically integrated, you pull the machine off the shelf and you put it in a box and you send it out for warranty, and it gets fixed and you pay for that repair, and then it gets shipped back and you take it out of the box and put it back on the shelf. Our approach is entirely different. Comes off the shelf, we have a spare that goes right back in the spot. It gets repaired on site all the way down to the chip level. We're so big now with Bitmain, we do a lot of our own warranty work in-house. That machine is repaired, put back in the queue, and the next time one comes down for a fan or a hash board or a power supply or whatever the case may be, it gets pulled off and another one put in. And what that really is, it's about the system that we built, but more than that, it's about the people. I mean, our results have been great, but man, I can't tell you guys, to be at a facility and to see a group of people that want to come in after their shift because they want to be part of what you're doing. Sandersville, I mean, to add 30,000 machines in a period of like 3 days. Guys were coming in after hours and days ahead, because when they energize that transformer and that string that happens to be part of their pod, and it's incentivized to be uptime. It's that culture, and we've created this passion, and so it's really just it's pushed our growth, but it's also pulling our growth, right? And you asked me a simple question. I'm going on forever, but there's a TV station in Atlanta, and they were talking about mining, and they interviewed Miss Judy. So Miss Judy is the development director in Sandersville, Georgia. And they were talking with the tax commission and a number of other places. And what we've done different than everybody else, and the reason that we've been able to grow, we have a cost plus model. So we work with these rural blue collar communities that have surplus energy, and we focus on nuclear and renewables. The city has a cost that they buy that from the generation. So the city is actually my utility. So our business is cost plus. So we pay 0.3 of a penny or half a penny per kilowatt hour, and that goes to the city. So, we pay 1.3 cents for power wholesale in some markets, and then you add a half a penny for margin for the city. Then you add transmission, distribution, and taxes, and now you get that 4.1 cent number. But here's where it's meaningful. That margin to the city goes into their budgets for infrastructure, schools, parks, roads, community stuff. Well, in the state of Georgia, as part of the Territorial Act, sales tax that's generated on utilities stays in the jurisdiction. So this video that I'm talking about that's on YouTube, but it was actually on the Atlanta TV station, they said not only is this massive investment in miners creating jobs, but they're buying so much power in bulk that it's driving down the cost of power for the ratepayers in the jurisdiction. It's the margin on the power that we're buying has doubled the budget. Like little Washington, Georgia, their revenue went from 16 million to 32 million in 1 year. But then to finish on what Miss Judy said, she said they have so much sales tax revenue over and above that there's nowhere to put it, and it's actually pushing property taxes in the community down. So big picture to end that story, and then I'll stop just dribbling on aimlessly. You see on the news, they would have you believe that when a Bitcoin miner comes into town, that the townspeople have their torch and pitchfork and they're trying to run us off. In reality, what we're seeing is we're having city council persons and mayors and different small communities reaching out to us, like you've seen in Dalton. We're buying more facilities there. That's because the Dalton utility says, guys, what do we have to do we help them stabilize the grid. We generate revenue for the city. We generate revenue. We generate jobs in the community. So we've done it different. And I think with all of those things factored in, the reason that our numbers are what they are is because the city makes money when CleanSpark is operational and we're profitable. It's the actual definition of a partnership. So to be partners with the communities and the citizens in the community, as opposed to competing for finite resources, it's differentiated us, and it's enabled us to go into more and more small towns, Now you're seeing it in Mississippi. I would count on the fact that you're going to see it continue to expand because we've developed that relationship, and it's symbiotic. It's a win-win. It's a different way of doing business, and it's the CleanSpark way. So we're excited about it. So real long answer to our quarter of questions, but that's why we grew, 163% over the prior year, same period. We were able to post positive net earnings. We had really strong adjusted EBITDA as a result of the new accounting rules, but also as a result of power prices being low, Bitcoin prices being high, and our efficiency being, quite frankly, better than anybody else.
Well, it's a great answer, Matt, and it is a little bit long, but I love hearing it because every time you come on the channel, no matter what we talk about, you always find a way to weave in the employees at CleanSpark, how motivated, how engaged they are, and those community partnerships and engagement with the local members of those communities. So I think it is a key differentiator, and you definitely are consistent with that delivery. So moving along a little bit, Anthony, I'll pass it to you. We're going to market cap now.
Yeah, so looking at the market cap, I think we put out a tweet late in 2023 when you'd reached that 1 billion mark, and that was like a threshold to get to. That sort of put you in that sort of that top tier with the other miners. And then 12 days later you got to 2 billion. So it took you all that time to get to 1 billion, and then literally 12 days later you got to 2 billion. Now you've reached 3 billion in this last few days. Do you see now that the market is starting to understand more about the valuation of the mining companies?
So I think the valuation of miners has been recognized, but historically it's been Riot and Marathon. They're the 900-pound gorilla in the room, and I'll tell you guys a lot of what's happened to rectify that. And this is the first time I've ever talked about this publicly, so it's fascinating. A month ago, we put out an announcement. We actually didn't do an announcement. Zach, I got a call from David Pan from Bloomberg, and he wanted to talk about some stuff going on in the industry. I happened to be on a plane. Zach took the call. David said, "Hey, what are you guys doing that's new and exciting? What can we look for?" And Zach talked about the fact that with 3,000 plus Bitcoin on our balance sheet, that we're going to create our own in-house trading desk to generate yield on our own Bitcoin, because quite frankly, doing it elsewhere is too much counterparty risk. I appreciate everybody in the space. I don't really trust anybody. I trust us implicitly. So we talked about that. And as a part of that, we're running a publicly traded Bitcoin mining company, and we have really detailed access, granular data on energy and on natural gas prices and on energy futures and on hash rate and on efficiency of machines. What we haven't had is that granularity in the public markets. So as a part of this, developing our trading desk and getting deeper into the granularity, we decided that we should probably have a Bloomberg terminal at each office so we can do that. So back in the $1 billion market cap range, on a Bloomberg terminal, they're giving us the demo. They pull up Marathon, and they show us everything about Marathon, short interest and institutional holdings. We go through the whole thing, and it's a virtual presentation. And then she says, and this is the peer group. And so she clicks on the peer group of Marathon, and the peer group populates, and it says Riot and Hut and Hive, and it has all these names, and CleanSpark's not on there. And then she pulls up the Riot on the Bloomberg terminal, which every institutional trader on the planet is looking at that same screen. Riot had the same thing. So you guys have known me a long time, since we were, converting or pivoting into this business from energy. So they pull up CleanSpark, and it talks about our institutional interest. It talks about all of this other stuff, and we click on peers, and the peer group that was populated based on the metadata on a Bloomberg terminal, which is the most important information. Our peers were companies like Sunrun and solar companies and energy companies, and it was a breakdown in the way that the data was fed. So when you look at the ETFs and the acquisition of publicly traded miners, because I think one of the things we should talk about today is why a miner over an ETF. But CleanSpark had there was a decidedly lower number as a result of not having appropriate information on a Bloomberg terminal. So as we've worked to rectify that and to create the story that, guys, we know energy. We're energy guys in our DNA, but we are a Bitcoin mining company, period, end of story. And so to kind of clarify that, now you've started to see increase in institutional awareness and attention to CleanSpark, which is how we've gone, well, that and obviously fantastic execution by the teams, but from 1 to 2 to 3 and 3.5 or whatever it is today, we feel like now we're getting closer to an appropriate valuation. And I think we've, quite frankly, I think we've just begun.
Yeah.
What an incredible growth story. Yeah, and super interesting to hear about that and how, just the classifying of different companies into different sectors was maybe doing you a disservice there. Now, perfect segue, Matt. You actually said it in your last response, but why would someone want to purchase shares in CleanSpark or one of these other large miners compared to an ETF or just holding Bitcoin?
So that's a terrific question, and I was just presenting in New York a couple of weeks ago at a conference, and there were a lot of family offices and institutional investors, private equity funds that were there asking the same question. And at the end of the day, by definition, a spot Bitcoin ETF is in fact a Bitcoin ETF that sells exposure through a securitized instrument, and they own that underlying commodity in order to sell that exposure. We all agree on that. The one part of that word is spot. And what that means is in order to sell exposure, they have to buy that, and they buy that Bitcoin at spot prices. So you're getting exposure to Bitcoin today. There's $3.5 billion in inflows into the ETFs in the first couple of weeks. A year and a half or 2 years faster than it took gold to get to the same level, I might add. But you're having access to that Bitcoin at spot. So there's really, it's the same as buying Bitcoin, except you don't actually own the Bitcoin. You have exposure to it, and the exposure is really the bet is predicated on the increase or improvement in the price. A Bitcoin miner is a leverage play because my access or my exposure to Bitcoin is half of that or less than half of that. So when you invest in a miner, you're investing in a leverage play. Now, there's a lot of discussion online. Cantor Fitzgerald, Josh Siegler, and Will Carson, they do a great job. They took a really deep dive. They published a chart of post-halving profitability. And there's a number of variables in that, but they did the work. It's not, they didn't just guess and throw a dart. I mean, there's a lot of research to this. So you look at the different costs to mine. A vertically integrated miner with power costs that they can control and the ability to, like from our perspective, speed up or slow down the machines as environmental or market conditions dictate, gives us that increase in margin. So it gives exposure to Bitcoin at a much lower price. Secondarily, in December, about 12% of the revenue over a number of days through the month was generated from transaction fees on the Bitcoin blockchain. So ordinals and inscriptions. But now what we're seeing is as the ETFs are buying this Bitcoin, when people invest in an ETF, it doesn't necessarily drive transaction fees, but as the ETFs now have to hold that Bitcoin, now that creates transaction fees in order to process those transactions and record that on the ledger. So we're seeing an increase in the baseline amount of transaction fees. So a Bitcoin miner it's a leverage play on Bitcoin, different than an ETF, and it has access and exposure to the transaction fees, which we believe is going to continue to be an increasing component of the Bitcoin revenue, especially as adoption continues to grow. So I think, as an investor, I can't trade my own stock. I haven't sold, nobody has sold in ages, with the exception of like a sell to cover type thing on taxes. I can't trade it because I'm always in possession of MNPI. So I trade other miners. I own Marathon. I own Core Scientific. I own a couple of them. And so I do that because I like the exposure. I like the leverage. I like the efficiency. I like the opportunity. I hold Bitcoin. I have a strong conviction on Bitcoin. I sent a tweet out about it yesterday that I literally am awake at night thinking about how this changes the world and where it goes, what it means to my kids, what it means to my family, what it means for time. And, not to try and be a maxi or any, not prudent financial decisions, but, from the data that we've seen and from what we know, this really is this is a tipping point in human existence with regard to hard money and a global currency. And so, the idea that there's a new asset class and there is a subset of that asset class being miners that give you an opportunity to not only get exposure to the underlying commodity, but also exposure to the network that supports that commodity, that I believe, and I think you fellas both believe, is really the future of money.
Yeah, it's funny you say that, Matt. It's almost impossible not to become a maxi once you spend enough time and energy and discussion with people in this industry. I find myself doing the exact same thing, looking at Bitcoin price when I get up to make my kid a bottle in the middle of the night, and Anthony's 7 hours ahead and he's saying, why are you on your cell phone right now? But no, it's definitely hard not to be sucked into that rabbit hole and the orange pill and all the rest of it. Great answer. Now shifting gears a little bit, Matt, and you kind of alluded to this in one of your responses, but you've now secured the sites to meet expansion plans up to the 20 exahash. You mentioned you're going to continue to look for some of those blue collar market opportunities earlier, but what is the plan to find facilities for the remaining exahash that you guys have purchased and machines coming?
So we have 32 exahash total of machines that we're committed to buy, and then we have an option to get us to 50. So it's another 18 exahash of the new S21. So I think first it's important to talk about why we did that. And that is, when the last bull cycle took off, machine prices went parabolic. Many of our peers were jumping in buying machines at 70, 80, 90, $100 a terahash. We looked, I think we talked about this before, actually with both of you gentlemen. In late 21, we looked at the Henry Hub future pricing model for natural gas. And even though we're predominantly nuclear, energy prices domestically tend to follow natural gas prices. And, it's at a recent history low right now at like $1.87 a decatherm. So what we're seeing is energy prices trending down. Back then, we saw energy prices trending up, and there was kind of an arms race to buy rigs. So we did kind of an analysis internally, and we looked at, okay, with the price of energy likely going up substantially, and Bitcoin being at the time $60,000+ at an all-time high and having historical volatility, but then adding the difficulty on the network of a couple of $1 billion of XPs, it really created some uncertainty. So now, in order to keep up in the space, we're forced to buy machines that we paid premiums for, and they were good, they were great, they paid for themselves, all that is fantastic, but it was out of necessity rather than out of strategy. And we talk about, I think you've heard myself and Zach say a million times, strategy over ideology. So what we did is we fixed a variable in the equation. We know what our price is for miners. We know exactly what that looks like going forward. Now infrastructure is the only variable. And what we've proven, we just energized Sandersville, right? We got 14 exahash live now. There's an additional 50 megawatts on there that's coming online. But we built that. It came in under budget, came in on time. We were done ahead of time. The city finishing the substation and then energizing that was the delay that pushed us from January into February. But we were to build 150 megawatts and to come in ahead of schedule and under budget is phenomenal. But what we've now learned is we can build a machine, we can build a facility that has a PUE of less than, of 1. So we're not, what that means is there's no parasitic load. There's no energy going to HVAC. There's no energy going to lighting or anything fancy. When we're buying power, we're optimizing that power directly to mining activities. So it increases the profitability. And so what we've learned is, Bryce, to answer that question, we can buy greenfield. We can work with a utility. We can make a meaningful impact in the community. And in a very short period of time, we can employ a ton of people and have a facility up and operating very quickly. So every week, a group of our executive team, we have an M&A meeting on our calendars. We have a number of meetings that are rigid, right? So we have the stand-up that has all the executives. Everybody talks about blockers in their department. What do they need help from other departments to create that sustainable approach that we have, that everybody supports everybody. The right hand knows what the left hand's doing. Gary can budget for stuff because Bradley and Taylor have told him what their needs are. Scott's already hunting land and buying transformers. So, keeping communication going is real important. But this M&A call, it's got guys like Duncan Poe, and Duncan's, he's in Alabama and Texas and North Dakota and Kentucky. And, that kid's always on a plane, and he's looking for opportunities. He's looking for communities. He's looking for energy utilities that have surplus power, or there's stranded resources that we can meaningfully impact and provide the ability to continue to build that sustainable generation. So there's probably 20 different projects on that M&A board, and it goes through due diligence. The last couple in Dalton you saw, Mississippi, we're super excited about what that means for us. We're familiar. The mining operation that we bought in Mississippi has active hosting. As that hosting moves out, we're moving in. I think we said in our press release today, we've got boots on the ground. Our team's in Mississippi right now. We're preparing that to be the next asset in the CleanSpark portfolio. So that's turnkey. Everything's there. Transformer, substations, infrastructure, buildings. We'll go in. We'll put our proprietary power distribution units in there. We'll put our machines in, so there'll be S19 XPs or S21s. It'll have our software and firmware overlay, and we'll have that thing, it'll be plug and play within a couple of weeks. So, we fully expect to blow away our 20 exahash by midway through the year. And again, apologies for the long answer. I'm super passionate about where we are. I think that the path to 32, we've got the opportunities on the board to get there, and I think if you were to ask Zach today, he would tell you 32 is a foregone conclusion in his mind, and now we're just building for 50. But to his credit, Zach's a young guy, and he's very aggressive and very forward thinking, but he's very prudent about his approach. And where we are today, the machines that we have, the facilities that we have, the growth that we have, the capital strategy that we have, the lack of debt is a result of planning that started 4 years ago. So, this is a process. We're filling the pipeline, and with the exception of when Lancium fell on their face and didn't have the megawatts available for us in Texas, we've never one time missed guidance. We try to under promise and over deliver. And I think we're starting to get all of that. This is kind of the culmination of those efforts. We're now being recognized as an industrial scale miner. We've grown to the point, I think we said this on the earnings call, but because we've established all of the infrastructure from a corporate overhead perspective, every additional exahash is 8% more efficient than the prior one, because we're not top heavy anymore. So this growth, it really, the benefits of scale, it's a raging fire right now, and we're just throwing gas on it.
Just to add to that, Matthew, I mean, you talked about the sites that you're looking at in North America. I mean, a number of your peer miners have started to, go further afield, and we've seen the likes of Marathon go into the Middle East, into Paraguay. We've seen Bitfarm set up in Paraguay and Argentina, the likes of Hive in Sweden. Do you ever envisage moving out of North America to look for that cheaper energy and availability of stranded energy?
So I would say that, yes, we always are looking. We were, one of the items on the board was Norway. Okay. Really fantastic opportunity. Climate-wise, it's great. You don't have to worry about cooling machines. Abundant power, predominantly hydro. Within the last several months, Norway has joined in the EU on their energy policy. And so the prices of power in Norway today, relative to where they were 3 months ago, it's 400% higher. It doesn't make sense. So it's kind of kitschy, and I get a lot of grief about it, but we always call ourselves America's Bitcoin miner. That meant something to us, and we trademarked that. And I'll tell you why. The revenue story I told you about Sandersville and about Washington and about Dalton and about College Park and Norcross, that's meaningful to us. Creating jobs, allowing people to grow and have a career path in these rural, hardworking communities is meaningful for us. So I don't want to sound like a politician, but that matters. Second, we met with the guys at the Sovereign Wealth Fund, and it's a terrific opportunity. But I want to pose you a question, right? we saw the flame out of FTX, and we've seen Three Arrows Capital, and everybody points to the same thing, and it's counterparty risk, counterparty risk, counterparty risk, right? Rehypothecation of assets and counterparty risk. So let's say I pop up a facility in another jurisdiction where I'm partnered with a sovereign fund. The sovereign fund is in fact that jurisdiction. So if there's a dispute, to which court do I arbitrate that? I don't win. So what we look at from our perspective is we definitely want to go somewhere. I love Paraguay. The challenge is that there have been tariffs getting machines into the country. Then the issue is once the machines are there, the power contracts that many of our peers have faced have changed materially from when the original agreements were placed. So what we look at is how can I achieve the guidance that we've given to the market and continue to operate the CleanSpark way? Because there's a lot of different ways to mine Bitcoin, but when you look at realized hash rate and uptime and efficiency and margins and everything else, I think we've got it dialed in. We're learning every single day. I don't mean to sound arrogant with that, but I like to have the ability to make sure that what we do is consistent, and our teams are cross-functional. I'm on a call every single week. Taylor and Brad are, they run all of our mining ops, and these guys geek out on stuff. And, hey, we took this section and, we flashed this new firmware and we tested it on the 8th. And the goal of the test was to increase output and decrease energy consumption with this new firmware. And 30 days later, measured at Foundry, we increased 0.2% of efficiency, which is $50,000 in free hash rate for that month, and you blow it out to the year. And these guys think about stuff like that, and we're always iterating, we're always working, and the teams go from one facility to the next. We get our guys together all the time because, great ideas don't happen in a vacuum, right? It's this collaboration. And so being on this call every week, these guys are coming up with ideas and suggestions, and, somebody built, we have a filtration system, and somebody built a piece of equipment that allows us to change out the filtration system in about 1/10 of the time it took us previously. We acquired a conveyor system. Previously we could rack a couple thousand machines a day, which is a huge lift. We talked about on our earnings call, we're doing 7,000 in 24 hours. And it's about, hey, I have an idea. What do you think about this? And these guys collaborate and they work together. So what I can control, I want to be able to have input and influence over. The counterparty risk in this industry with the uncertainty of the regulatory environment, to take that and magnify it by creating uncertainty in a regulatory environment outside of the jurisdictions that we're familiar with, is a little scary for us, especially when we're focused on delivering to our shareholders. So, answer your question, absolutely we're going to expand, but it has to be the right opportunity. So you can trust when we say we're going to do something historically, we've done that. And it has to be the right situation. So we're definitely interested, but right now, stabilizing the grid, being a load balancing entity, working in demand response markets, creating revenue back to these small communities, and advocating for and on behalf of our industry, both at the state and federal level, working on policy to make sure that we're educating the policy makers about what we really do, how it works, and how it benefits the country and the stability of the grid. That's really our focus right now, and I think that's kind of ground zero, and we'll expand out from there.
Sure. Yeah, makes sense. No worries about the long answers. I hang out with Anthony a lot, so I'm used to them, Matt. Now, you talk a lot about things that are within your control and things that are not. One that's not is the halving, which is now coming up in about 9 weeks. Obviously, companies are doing a lot to prepare for that, which you've talked about throughout today's discussion. But effectively, energy prices double overnight, or the block reward is cut in half. You mentioned the transaction fees can help offset that. How is that going to impact CleanSpark and this strategy of searching for stranded energy? I would imagine that becomes even more relevant as the value of these Bitcoins compared to energy goes up and up. Is that correct?
Yeah, it really is. So you can't, the one challenge to the Bitcoin blockchain is you can't look anywhere and find what the current energy efficiency of every machine on the fleet is. There are S17s and S9s that come online in China or in other jurisdictions. That we're hearing now about Ethiopia. There are miners going there, and so you've got less efficient machines. Some where there's cheap power. The problem is that our industry has created this negative kind of impression because miners go in, they buy a lot of power, they leave when it doesn't make sense. They make a mess. They don't pay their bills. There's just this uncertainty in the space. So what we can control is the efficiency of our miners and the power contracts we have. So what we talked about is that our fleet right now with 120,000 machines is just under 26 joules a terahash. So I know you guys know what that means, but effectively that means we take 26 watts of energy to process 1 terahash of data on the blockchain. By the time the expansion to 20 is complete, 20 exahash, our fleet efficiency will be about 23 joules per terahash. So that means, again, 23 watts of power to create 1 terahash of processing data. If you look at the average of the machines that are in the fleet, globally, that number is in the 36 to 40. I've heard Fred say 42, and I've heard Jason say 38, 35, 34. What that means is at 23, we're at least 30% more efficient than the average of the blockchain. We also know if you look at our all-in power costs, and we've created a different approach when we did our earnings. We put a pie chart on there. This is our wholesale cost of power, which is what everybody talks about. But then we also included in there, this is transmission cost, this is distribution cost, this is sales tax on that energy. These are the all-in costs. This is the profit margin to the city. So, you used to hear guys talking about 2-cent power all the time, and then it comes, well, how does your earnings say 7 cents, but your press release is 2? Well, you can't go up to the substation with a pickup truck and get your own power. You have to pay for transmission and distribution. And so by looking at our all-in power costs, looking at the models we built, we're in that 4-cent range right now. So having the most efficient fleet and having power costs that we can manage. And when I say we can manage that, I mean beyond that, we have models. Those guys I've been talking about, they build a model. And so it's got an API from the utility. So we get day ahead and hour ahead pricing. It's got weather built in. So for example, S19 XP won't function above 40C. An S21 XP will go to 45C. That's meaningful in a hot climate in an air-cooled environment. So we look at temperature. Relative humidity is a factor because in an air-cooled environment, the evaporation of the temperature actually creates a greater delta in the efficiency. So it makes the machine work better when the humidity is higher. So on top of that, we then look at the hash rate, global hash rate. What's the price of Bitcoin? What's the difficulty on the network? And then we make decisions in real time. It's not flip a switch to low power mode to overclock. It's a throttle. It's like a rheostat, like the temperature in your car or in your house. We can speed those machines up when temperatures are cool, Bitcoin prices are high, energy prices are low, and the inverse of that is also true. So we can take, we don't have a lot left, but we have like JPros. We can take a JPro 110 terahash machine and we can crank it down from 3,000 watts or 3,300 watts, which is, basically 30 watts a terahash. We can reduce that 110 terahash down to 70. And we can reduce the consumption down into the high teens, low 20s. So now we build a mini XP, and if I have shelf space, I'm going to use that because I have the flexibility to make that profitable even when energy prices are high. And that's not only that model that I've told you about, but it's the firmware and the software that's overlaid on top of that. So to the end of that point, having to us, everybody's like, oh my gosh, your revenue is cut in half. Well, I disagree. And I disagree because, number one, we're not factoring in transaction fees. But number two, the machines that fall above that threshold with energy prices that aren't certain. Not every miner is currently in Ethiopia, or everybody's left Kazakhstan, and not everybody has free hydro in China or is connected to a coal-fired power plant somewhere that they're just burning to burn. The network is largely built up of grid-connected, behind the meter and in front of the meter, demand response, reasonably operated companies that have a prudent approach to business, but they, relative to us and some of our peers, have much less efficient machines and much less control over the energy. So we believe that the impact is going to be closer to 30% to a company like CleanSpark. We believe about a third of the hash rate will fall off post-halving. Now, is that indefinite or does it come back online? I think that's a function of where Bitcoin prices go. But what I do know is that we're positioned better, in my perspective, being vertically integrated, owning our facilities. Everybody that touches a machine at one of our facilities is a shareholder in our company. We're all aligned. Everybody's pulling the same direction. So that 99.9% uptime, when I'm on that weekly call, you get these guys. David will be super excited about something that happened in College Park, and they, for a 2-day period, they were at 100%. So think about it. You got 50 megawatts of power running and all the machines associated with that, and not one of them is down. Not a fan, not a hash board, not a power supply, not a power distribution unit, not a transformer, no switch gear. So having that pride of ownership and that vertical integration and that control over every single touch point, I think has us prepared for the halving better than anybody else in the space. It's my personal opinion, but if I had an opportunity to go anywhere else, I wouldn't.
Yeah, that's a good point, Matthew. We're probably coming close to the end of the podcast now, but one last question, which is really one of these that becomes a hot topic in the forums, and it's around about stock compensation. And you've articulated quite a number of times in this call about the team at CleanSpark, the whole team at CleanSpark. Can you just sort of give an indication of how you as a company look at stock compensation from an employee, from a managed perspective, and what it enables you to do as a company? Sort of like to allude to some of these comments that come out about companies paying significant amounts of stock compensation.
Well, so we just received the benefit of the new FASB, the fair value accounting on our Bitcoin. We've had kind of the opposite of that, because back in 2021, the stock was appreciating, things were going well. The board granted options to some of the executives. Those options were, $23 strike price, in that range. And then the kind of the bottom fell out. So we were basically recorded and reported that we received this benefit, but nobody exercised those warrants. But you still have to record it under accounting rules. So fast forward 9 months, the stock has gone from $18 down to the single digits as a result of where Bitcoin went and the bear market. So the board said, listen, guys, let's do this. Let's tie your compensation to a different metric. So what's fair? Let's tie it to market cap, because as you grow, then you benefit along with the company. So then the pushback is, well, it just incentivizes you to issue more shares. So then let's tie it to hash rate, because that benefits everybody. Well, then you're just growing hash rate and you benefit without regard to the stock price. So the most recent grant is our shares, myself, Zach, the whole executive team, they're benchmarked. When the stock goes up 100%, 200%, 300%, 400%, there's another grant of shares. What we've tried to do, working with ISS and Glass Lewis, is find a fair value. At the end of the day, Zach, like you guys talking about being 7 hours apart, I'll get a message from Zach when he's negotiating on these S21s and he's working with Bitmain in China at 3 o'clock in the morning our time, and then we have an executive meeting at 10 o'clock in the morning our time, and then Zach and I are negotiating with the city at 7 o'clock p.m. our time. This is a 20-hour job, and it to have the kind of performance that we have, I don't make any excuses, but what I can tell you is issuing those warrants and reporting the value of that award and then repricing and reissuing them, it got double counted. So all you see everywhere is Zach Bradford made $29 million, not even close to being true, right? Not only was it double counted, but also it was warrants that even with this epic run are still not even in the money. So I think that the people in this industry that are well compensated deserve it. I mean, to grow, you think about this, the last time we talked, we're sub $1 billion, and now we're $3.5 billion, and nobody's pay has changed. In fact, in our 10K or 10Q that we reported, you saw that both Zach and myself, our compensation went down by more than 50%. So it's not like we took a pay cut. It's just because those options expired that we didn't exercise anyway. So I get a lot of calls about that. The Marathon guys just got a new compensation plan. It's pegged to the S&P. If they outperform the S&P, they do better. The Riot guys have a new compensation plan. The issue is this is a nascent industry. There aren't a lot of experts. To attract the people that we have, guys like Taylor Monig. I mean, this guy was building dual phase immersion in his dorm room at Arizona State 12 years ago. When we stole Taylor, he was at a company called TMG in Dallas, the state-of-the-art immersion cooling company doing Department of Defense stuff. And Taylor's a huge Bitcoin maxi. That guy's forgotten more about Bitcoin than I'll ever know. And I met him at a conference. I really liked his thesis about Bitcoin and his passion for operations. We basically stole him from one of our vendors, and that doesn't come cheap. You can't acquire. You couldn't go hire a guy like Taylor Monig anywhere else. I can tell you, when he came to work with CleanSpark, you look at the top 10 major miners, I promise you 3 or 4 of them had an offer to him. He's that valuable. Bradley Otis. I mean, this guy, he thinks, I try and think 1 or 2 steps ahead. This guy is 7 or 8 steps ahead, overseeing the operations. Think about this, to have a fleet of guys running at 99.9% uptime and then adding 150 megawatts and not having that uptime impacted, to have, Bo Ginn is our facilities manager down there, to have that kind of efficiency in the team, you got to pay for that. And shareholders complain if they perceive that it's outsized until the stock's doing well. And I mean, look at my Twitter today. People are talking about, hey, my kid's college is now paid for thanks to CleanSpark. We're not working any harder now than we did when we were 1 exahash. We're just starting to see the fruits of our labor. So, I think that if we look at all of the different inputs and the feedback from Glass Lewis and the feedback from ISS, and nobody's ever going to be happy unless the executive team works for free and improves by 100% every year. But you can't attract real quality people that do that. I mean, the team that we built, from our accounting team to our operations team to the guys that do our repair facilities. I mean, this guy Bashal, he's working in the mining facility, and we kind of drop a bomb on him. Hey, need to talk to you. And so I'm in the facility, and he's over there, and he came over to College Park from Norcross. And I said, so have you had your meeting with Zach yet? And he's like, no, should I be scared? Oh yeah, you should definitely be scared. And just messing with him, right? But at the end of the day, he gets a promotion. He gets sent away for training. He's running a team of guys that are, it's so freaking cool to walk into this lab and watch them work at the microchip level and know that, this guy works for us. He gets paid really well, above scale in the area, but now he's developing skills in an industry that's not going to be a nascent industry for long. And I'm so proud of the fact that, we train these people, we work with them, we incentivize them, they share in the success. I personally wouldn't have it any other way. And I think the complaints about executive comp, I saw the message boards yelling about Marathon and about Riot before that. These guys work their asses off. Excuse my language. This is a hard job. And I think to attract the quality of people that are leading the top group of miners, it's going to cost money. But at the end of the day, most of that is equity based, and they thrive and survive and succeed when everybody else does. So our interests are aligned.
Yeah, and I tell you what, Matt, I'm a strong advocate of pay for performance, just like sports, right? Mahomes makes a lot of money and he wins Super Bowls. If you want the best players, you need to pay top quality dollar, and I don't see any problem with that personally. But appreciate the answer, and I know that's kind of a sensitive question to some executive teams. That's it for the interview today, Matt. Anthony, do you have any other questions on the top of your mind?
No. I mean, to be honest, Matthew, we could speak for another couple of hours, and go through, things. And we'll certainly look at covering some other topics in the next, maybe some like the immersion cooling, and that you've got used to some of your facilities there and understanding that. But no, it's been a good session today. Thank you.
Matt, thank you so much. I'll flip it back to you for closing thoughts. You guys, if you're still watching this video, I know we have a huge CleanSpark following. Hit the like button. It helps get this content to other people who may find value. If you're not subscribed to the channel, feel free to join, and let us know in the comments section if you have any questions, concerns that we didn't get to in today's interview, and we'll make sure we ask them next time we have the team on. Matt, I'll give it to you for any closing thoughts.
First of all, thank you guys both. It's always fun to chat with you. You know, I've enjoyed our relationship and appreciate the work you do in the space. So thank you for that. I guess a parting comment: Bitcoin is now part of the narrative. I mean, you hear about it every day on CNBC and Fox Business and Bloomberg. I think the uncertainty in this industry is what creates the adversity. So people that are underinformed or misinformed believe what they hear on TV or take it for face value that, you know, Bitcoin miners are bad, sick, and wrong, and get out your torch and pitchfork, right? So my suggestion to anybody that's remotely interested in Bitcoin is take some time and educate yourself. Just read and understand what it's about. I have a friend, Safidian Amos, that's written a book called The Bitcoin Standard. If you haven't read it, read it. Just really understand what fiat currency is, what the government's incentive to print additional capital is, and how Bitcoin is hard money. It's immutable, it's transportable, it's decentralized, it's secure. I could send it to you right now without it going through a bank. You know, I retweeted a video from Barack Obama a week and a half ago. He said, we hate Bitcoin because it's like everybody's walking around with a Swiss bank in their pocket. And quite frankly, the government can't see what they're doing with their money. To say that out loud and to acknowledge, thank you for making our point, Mr. President. You know, this is an opportunity. It's a tipping point in history. Take an opportunity, and if you decide Bitcoin isn't for you, at least make that be an educated decision. And if there's anything that CleanSpark can do as far as mining, if you have any questions, reach out to our team. I'm very, very proud of Brittany and the efforts that she leads on our IR team. We try to respond to everybody. So, you know, let us know what we can do to help. And, you know, we're here to support and strengthen the space. And I recognize that both you gentlemen are doing the same thing. So I appreciate the opportunity.
We appreciate the kind words and the support. You're always welcome back. Matt, thanks for everything you guys do, and congrats on phenomenal earnings and January results. We look forward to seeing what 2024 brings for you.
I am too. Thanks, guys.